All right. Good morning, everybody. Good morning, all you magnificent melon heads out there. It's 9 a.m. on August 16th, 2023. Big story this morning is Target earnings. What a monster earnings beat from Target. Oh my God, the strength and resilience of the American consumer. And Janet Yellen is over there like, maybe I've eaten enough psilocybin that the market actually does look strong. No, that's not what's happening. Yes, Target did just post a monster earnings beat. But you must read beyond the headline. You got to look beyond just the EPS number. The first hint, all right, was how big the beat was. Target posted earnings per share of $1.80 versus expectations of $1.39. That's a monster quarter from Target. Did the whole economy just suddenly turn around? No. The first clue is in the next line down when you look at Target's revenue, $24.77 billion versus expectations of $25.16 billion. So the revenue came in lower than expected. How do you get a monster earnings beat with a corresponding miss on revenue? That's the first thing that should alert you that there's some problem in Target's earnings out there. Something else is going on. Are they engineering the books? Are they doing? No, they're not breaking the law. They're just not buying new stuff. That's the problem. And again, we see it in the trucks. We see it in the ships. Target reported a 17% decline in their inventory in this quarter. That's where this big earnings beat came from. They just didn't replace the stuff that they sold, and so it's making the company look more profitable than it is. All these people who are looking at that earnings beat, all the algorithms right now, who are piling into Target stock because of the top line earnings number and ignoring the rest of the earnings call, which is just just dumpster fire of the U.S. economy. If you look at what was actually said in the earnings call, there's like one or two good lines and everything else is unmitigated dumpster fire. And yet people are piling into Target stock right now. They are going to get slaughtered in that stock. 17% decline in inventory. They're not buying the stuff that they replace. And so it's the appearance of profitability. It's going to be a one-time thing and it won't last. And they're already saying it. They're now saying mid-single digit decline in comparable store sales. Guys, same-store sales, when you're talking about a retailer, there is no data point more important than same-store sales because you can't fake same-store sales. You can't fake how much money is being spent on store X by opening up store Y in the next town over and making it high declines in sales. Comp sales, your comparables, your same-store sales, that is the biggest number. And they were already pretty bad for Target. They were already forecasting low single-digit growth to low single-digit declines. Now they're saying mid-single-digit declines. So Target is saying it's going to get worse. And that's why they're not buying more inventory. Now it's masking the financials of just how bad a quarter was because not buying the inventory makes their EPS look higher. And this market just FOMOs in. They don't care. They just number go up. They pile into Target. This is not a healthy company. This is not going to end well. And elsewhere, we've got looks like the early innings of another bank run setting up in China. And check me on this one if you guys think I'm being a little too doomy and gloomy here. But Zhongrong, one of the biggest trust companies in China, and when you hear trust company, think shadow bank, right? Their business model, they're not exactly a bank. They don't have a bank charter, but they operate very similar to a bank, kind of like insurance companies do here. And sometimes sometimes hedge funds operate like shadow banks here in the States. Zhongrong just announced, or at least the story just broke, that they have now missed payments on over a dozen of their wealth management products. Just yesterday, they missed payments on 2 of their wealth management products. Well, it turns out they've missed over a dozen and that this actually started in late July. This is not a new story. And that's profound, guys, that it started in late July because that means that this problem at Zhongrong is not related to Country Garden. There may be a common denominator here, but the collapse of Country Garden is not what's causing the missed payments at Zhongrong because the missed payments at Zhongrong started before Country Garden started missing their payments on their bonds. So the common denominator here is the China real estate collapse, but Country Garden going under is not spooking people and causing other failures. The other failures started before Country Garden started going down. That means this is a whole different kind of problem, and it's much bigger than they're letting on in the press. This is not just worries over this one developer going down. It's spread to the shadow banking system. Now, Zhongrong has missed over a dozen payments. There's protesters outside their offices. There's cops outside their offices. Something that my channel got in trouble with when I started reporting on that back in November. I had a video get demonetized because I showed police officers dressed in gym shorts beating up protesters. And apparently that violated YouTube's community guidelines. So I can't show you any of those images. Now, there is no violence happening that I'm aware of at the moment, but the conditions are sure similar to what was happening last fall when people were getting beat up for the high crime of showing up in the bank and asking for their money back. So Zhongrong has missed all of these payments. They've also halted redemptions on some of their short-term instruments, and they're saying they have no plan to resume any payments because liquidity has dried up. So what does that mean? Zhongrong took people's money and they bought buildings. They invested in real estate projects that aren't worth anywhere near the money that they spent on them. And these are projects that they can't sell. They're illiquid, which means Zhongrong has no money, which means Zhongrong's investors are not getting paid. Now, the real risk now we get to talking about contagion. Those investors who aren't getting paid from Zhongrong, who do they owe money to? Because they're not going to get paid. And what about people, investors who have money in similar companies that have a business model very similar to Zhongrong? What if those people go and start saying, you know what, I see what's happening over here. I'm getting a little worried. I'm going to withdraw some of my money just in case. Enough people do that, the problem spreads over to that company too. And then you've got a bank run on your hands. Then you've got a panic on your hands. And guys, youth unemployment in China, we talked about this yesterday. 21.3% was the last reported number, and it was rising fast. They told us yesterday they're not going to report youth unemployment anymore, which means the number is getting worse, and they think it's going to keep getting worse. When 1 in 5 young males in China has nothing to do, that needs to worry you, that needs to frighten you. Because as Gerald Salenti over at the Trends Journal says, when all else fails, they take you to war. And when economies go south, politicians have a nasty habit of starting the shooting to try to save their poll numbers. And don't think our guys won't do it either. Don't for a second think a president with a 30-some-odd% approval rating wouldn't launch a few missiles to get his poll numbers up. Both sides have done it here in the States. The red guys and the blue guys, they've both done it. And they do it again. It's one of the oldest tricks in the book. So this needs to worry you guys. Be vigilant of this story and keep an eye on it. And with that, let's shrink my big melon of a head and let's see what's going on in markets. And before we see what's going on in markets, won't you guys please inflate that big, beautiful like button? It really does help with the YouTube algorithm. And if you're new here, won't you please subscribe to the channel? We do this every day, and we'd sure like to see you tomorrow. Fear is returning to the markets. Look at that. We are finally into neutral territory in the CNN Fear Greed Index. And if you guys are out there saying, oh my God, there's so much doom and there's so much gloom, no, there is not. This market is still leaning towards greed. As much doom and gloom as there's been in the last 2 weeks, and there's been plenty of it, admittedly here on this channel, there's been plenty of it, guys, the market is still leaning greed. All right, it's in neutral territory, but it's still past that 50 mark, which means we can go a long way further still before we turn back the other way. Now, there probably is a bounce coming. I don't think this is the end-all, be-all of market crashes. There will almost certainly be another bounce, but I don't think that bounce starts just yet. Maybe I'm wrong about that, maybe not. But right now, there's fear is slowly returning to the market. The S&P right now is basically flat, set to open down 8 points lower or 0.18%. And let's look at the long-term chart of the S&P real quick, guys. This is going back to about November of last year, but we're going to zoom in a little bit here because we had something significant happen yesterday. Check that out. The S&P 500 lost the 50-day moving average yesterday. There is that red candle below. Significant technical event. Look for a retest of that level today. If we don't bounce above that, if we head lower, then the next support level is probably somewhere around 4160 in the S&P 500. That was a cursory glance, by the way. That's not a thorough technical evaluation there, but we lost the 50-day moving average in the S&P yesterday. That is a significant technical event, and you're going to see a couple of those happen recently, not just in the S&P. Looking at the Dow, it's set to open 52 points lower or 0.15% to the south. and the NASDAQ is set to open 28 points lower or 0.2% lower. Now, the NASDAQ also, we had a significant technical event recently. Same thing on the long-term chart. Let me get my paintbrush back here. What'd you take my paintbrush away for? There we go. It won't let me paint. Give me back my brush. My brush isn't working. But here we go, guys. We lost the 50-day moving average. We actually lost it a few days ago. We came back up yesterday. We retested it. Look at that green candle yesterday. Right back up to the 50-day moving average. Sorry, that was 2 days ago. Retested and failed, came right back down yesterday. So the NASDAQ has already done that first retest of the 50-day line and already failed it. Looks like the NASDAQ's heading lower here, guys. Looking at the U.S. dollar, the DXY is up 4 basis points this morning at 103.24. We came down and retested that 103 level yesterday, bounced off of it, still heading higher. The dollar looks like it's set for more strength. Let's take a look at the dollar chart, and hopefully I get my paintbrush back this time. TradingView wasn't working. There it is. Let's zoom in on that, guys, because, look, that's the 200-day moving average on the DXY. We hit our head on that yesterday, and it looks like we're right around that level today. So watch the 200-day moving average on the DXY. That does mean that Dixie is ripe for a reversal. We could head lower. If the Dixie fails here and we head lower, that would put upward pressure on stocks. So that could be signaling a reversal. If the Dixie fails to recapture that 200-day moving average and heads lower, that's going to put upward pressure on stocks. That's an important technical level to watch. Also, looking at the bond market right now, we've got lower yields, mostly except for the long end of the curve. The 30-year is up 1.5 basis points. The 10-year is pretty much flat at 4.22. 2-year yielding 4.92. That's down 3 basis points. And the 1 month is yielding 5.37, down about 1 point this morning. Looking over at the commodities board, we have got December gold futures currently trading at about $19.32. That's down about $3 this morning. Silver, September silver futures at $22.61, down about a nickel or 1/4%. West Texas Intermediate crude oil, September 23rd future or September of 23 futures, they are trading at 81.03. That's up about a nickel today. Not a lot happening in commodities this morning, but let's look at a couple of more charts in commodities because, again, look at that. We have got gold also messing with the moving averages. Gold recently lost its 200-day moving average. Let's zoom in on that. We lost it yesterday. We came back up and retested it this morning, failed the retest. Looks like it's heading lower on gold. Again, if we get that reversal in the DXY, if we see the dollar reverse lower, that would put upward pressure back on gold. So a lot of things are right at these technical resistance levels. We had the two indices, the S&P and the NASDAQ, right around their 50-day moving averages. We've got the Dixie right around its 200-day moving average. We've got gold just lost its 200-day moving average. Right, so we're right at this technical inflection point where we're either looking at a big breakdown in stocks or we're looking at a sharp reversal. Not sure which way it's going to go. Right now, there's a lot of negativity in markets, so I'm leaning towards further downside here, but we could see a technical bounce here. We're at a very important level. And one more thing I want to show you guys is copper futures. Keep an eye on this one. Nothing really big technically happening in copper futures right now. We've got this declining level of resistance here that we've butt up against a couple of times, a false breakout and a move lower. The reason I zero in on copper is because we had some pretty lousy home builder sentiment here in the U.S. yesterday. Combine that with the outright collapse of the China housing market, there's a lot of demand for copper that is about to go away. And if the supply of copper stays the same and demand goes away, copper prices head lower. And copper is a very good barometer of the economy as a whole. Copper, look, right now is heading lower, and there's a lot of stories going on that could take copper even lower still. So keep an eye on this one. All right, but let's talk about Target because this is a story. The market's getting the wrong message about Target this morning. You got to look in the numbers. You got to go under the hood. Target slashes full-year forecast as retailer struggles to win over thrifty shoppers. Dated just this morning, Target cut its full-year sales and profit forecast as it tries to win over shoppers who are watching their wallets. The retailer's second quarter earnings beat expectations while its sales fell short of estimates. That's the first clue that something's wrong. When you get a big earnings beat but a revenue miss, that means there's something in the books that's making the company look healthier than it really is. And, of course, we're not going to talk about the Pride Month thing. We're not going to get into that. But Target on Wednesday missed quarterly sales expectations and slashed its full-year forecast as it again had trouble convincing shoppers to buy more than the necessities. The big box retailer cut both its full-year sales and profit expectations Target offered a gloomier outlook, even as some top economists have scrapped calls for a recession, and federal data shows inflation is cooling. The company now said it expects comparable sales to decline by about mid-single digits for the full year, and earnings per share to range from $7 to $8. It had previously anticipated comparable sales would range to low single-digit decline to a low single-digit increase, and that earnings per share would be about $7.75 to $8.75. So big reduction in their forecast here. Not only are they saying their earnings are going down, but they're saying their comps are going to go down big. Mid-single-digit declines in comparable same-store sales, guys. That's terrible. Companies' earnings multiples should not rise in that environment. Something to keep in mind here. Now, where is it? I want to show you here. Earnings per share of $1.89 versus $1.39 expected. We talked about that. Revenue, $24.77 versus $25.16. There's your big thing. Now, groceries accounted for only about 20% of Target's annual revenue. That's a big one. Their rival, Walmart, has made a very successful pivot into grocery. Target has not been able to do that. And so Walmart is seeing the benefit of shoppers who are being forced down the luxury ladder by inflation. They're shopping at Walmart when they used to shop somewhere a little nicer. Target is losing market share in that environment because Target doesn't do grocery anywhere near as well as Walmart does. I know a lot of you are saying, ew, groceries at Walmart. I get it. Their produce makes me want to hurl when I walk into that store. But a lot of people are buying their groceries at Walmart. They're not doing that at Target. Target hasn't made that transition. Comparable sales, a key metric that tracks sales online at stores open at least 13 months, declined 5.4%. That should be a death sentence for any stock in the retail industry. When your comps are down 5.5%, you messed up something big. That's a sharper decline than the 3.7% drop that analysts had expected, according to the consensus from the Street account. For stores, comparable sales declined 4.3%. Check this out. For digital comparable sales, down 10.5%. This isn't just a brick and mortar thing for Target. Target shoppers aren't going online either. And that's big because remember, we got retail numbers yesterday that showed online retailers were doing very good. They were up over 1.5% for just a month. That was in the retail data that just came out yesterday. Well, not at Target. There's a lot more people are shopping online. I guess they're doing it at Amazon and Walmart because comparable digital sales down 10.5% for Target. Again, this earnings report is terrible. Absolutely terrible. But wait, there's more. Here you go. This is why. This is why we're getting this big earnings beat, guys. Inventory at the end of the quarter fell 17% compared with the year-ago period. Target said that lower inventory also reflects a 25% year-over-year drop in discretionary categories. There's your earnings beat right there, guys. They didn't replace the stuff that they sold, and it's making the company look more profitable. That means there ain't going to be any profits next quarter. All right? If you don't buy more stuff, you've got nothing to sell later on. This is all of the earnings beat, that big monster number, $1.80 versus $1.39. They didn't replace their inventory, and it's making them look more profitable. But you'd never guess, looking at Target stock this morning, Target stock pre-market is up 7%. The FOMO bros are out in full force, piling into TGT this morning. It's not going to end well, guys. Enjoy this run-up because it's not going to last. The company's same-store sales are down already 5.5%, and they're saying it's going to get worse, and they're not buying any inventory, so they won't have anything to sell next quarter. This run in Target stock can't last. Now, check this one out. This is from Craig Fuller at Freight Alley on Twitter. Great stuff from Craig here. Last Friday, he was on Bloomberg TV discussing truck visit data, basically counting the number of times trucks move in and out of these Target locations. Target's earnings report suggests that what we've seen in the truck visit data truly reflects the forward sentiment for the retailer. Supply chains are upstream to demand, and the data provides the most relevant look at what's going to happen on the ground. Remember, I've been talking for a lot in the last week or two about how if Yellow's going bankrupt, if the shippers aren't doing well, then the producers and the sellers can't be doing well either, the people at both ends of the truck. Now, in his interview, he said, when you look at volume of goods that are moving, in particular, when you look at some of the near-term trucking data, as well as the truck visits that we see at truck locations across the country going into warehouses and distribution centers, anything that's exposed to consumer retailer. I'll give you 2 examples of this. The number of truck visits that go into a Target distribution center compared to the number of truck visits at a Walmart or at a Costco. The Costco and Walmart truck visits are relatively stable, whereas the truck visits at a Target have really slowed down. Now, there's one of 2 things causing that. Yes, the backlash of the Pride Month thing could be driving that, but the other thing is the groceries are probably contributing to that. Walmart and Costco do a lot more grocery business. Target doesn't do that, and they're paying the price for it. He goes on to say, and we believe that's because grocery and consumer staples, which drive the predominance of Costco and Walmart's business, have actually held up in terms of volume relative to consumer discretionary, which provides a larger portion of Target's business. So Target sells more electronics, more TVs, more clothes, whereas Walmart and Costco sell more groceries. The TVs and the clothes not doing as well. The groceries are doing a lot better. And, well, we're going to skip over this one. I also want to check out this one, guys. This is from Carl Quintanilla, and this is something that came out on the conference call. Target CEO says that during the first 5 months of this year, our source saw a 120% increase in theft incidents involving violence or threats of violence. A 120% increase versus a year ago. And that's just in the first 5 months of the year. Look, you've probably seen the videos. They're all over Twitter. Guys in masks walking in, helping themselves to everything on the racks, and just walking right out of the store. Sometimes entire crowds doing this. People by the dozens, even the hundreds, just cleaning out a store. We've seen videos all over Twitter of this happening. A 120% increase in thefts involving violence or threats of violence. Now, keep in mind, guys, this is affecting you, okay? Because this isn't just happening at Target. Target may be getting it worse than others, but this is happening at retailers all over the country, which means when you go shopping, the cost of these incidents is reflected in the price that you pay because they're raising the price of the stuff you buy to offset the cost of people walking in and helping themselves to at least less than $1,000 worth of stuff, because most cases, especially in these cities, they won't prosecute people who steal less than $1,000 worth of stuff. So they basically legalized strong arm robbery, or I should say decriminalized. They haven't legalized it, they decriminalized it. You're paying the price for that when you go shopping. All right, moving on from that one. China's shadow bank misses dozens of payments as risks grow. Products with missed payments grow to dozens, officials say. Companies has no repayment schedule and seeks investor patience. Yes, you investors, you people who just want your money back, why can't you just be patient? Why are you so impatient to demand your money back? Don't you love the gaslighting from these people? Zhongrong International Trust Company, something gone wrong at Zhongrong, missed payments on dozens of products and has no immediate plan to make clients whole, indicating troubles at the embattled Chinese shadow bank are deeper than previously known. Wang Qiang, board secretary of the firm, partly owned by financial giant Zhongji Enterprise Group, otherwise known as ZEG, they told investors in a meeting earlier this week that the firm missed payments on a batch of products on August 8th, adding to delays on at least 10 others since late July, according to people familiar with the matter. That 10 others since late July, guys, that's the giveaway. That's the tell that there's something much bigger going on here, because in late July, nobody was talking about Country Garden. Country Garden had not yet missed those bond payments. Everything was fine at Country Garden. Their balance sheet was strong and resilient. So the problems at Zhongrong predate the problems at Country Garden. That is big. This is not just panic started by the Country Garden story. Whatever is taking down Country Garden is also taking down Zhongrong. That means the problems in the Chinese economy are much bigger than we thought even a week ago. At least 30 products are now overdue at Zhongrong, and they also halted redemptions on some short-term instruments, one of the people said. And again, that's right out of the tyrant's playbook. When things get rough, the tyrants slam shut the exits and they lock everybody inside. We saw the same thing with Blackstone here in the States this year with their BREIT, the real estate investment trust that invests in commercial real estate. BlackRock has halted redemptions for 9 consecutive months in their commercial real estate trust, probably because things are so strong and resilient over at BlackRock. Now, Zhongrong doesn't have an immediate plan to cover payments since its short-term liquidity has suddenly dried up. That's another tell there. Short-term liquidity has suddenly dried up. No, it didn't. They just ran out of money. Their liquidity has been drying up for a long time. They've been hiding it by paying out people with the little bit of cash they had left on hand. They haven't been able to sell these buildings or lure in new investors for a couple of years, and they finally ran out of money. And now these people are going to lose everything because they can't turn around and sell these buildings. There are no buyers for these buildings. If they could have done that, they would have done it already. So everybody's going to have their hand out to Beijing, asking for some kind of stimulus, some kind of support. And so far, Beijing has been very hesitant. They gave us a 15 basis point rate cut yesterday. Peanuts, that's not going to be enough to stop a multi-trillion-dollar house of cards from coming down. And guys, this doesn't just affect private banks, shadow banks, developers. This also affects local governments and provincial governments. Don't forget, there's somewhere around between $9 and $13 trillion worth of LGFV, or local government finance vehicle debt, in China. Those are shell companies that the local government started in order to borrow money to prop up real estate investments or infrastructure projects that don't generate any cash flow. All of this debt is going bad at the same time. And it's already starting to look like last fall. China's shadow bank crisis sparks protests by angry investors. Protesters asked Zhongrong why the company won't repay them. And Beijing police have unusually strong presence around offices. There are no pictures, there are no videos. And even if there were, I wouldn't show them because I got in trouble with the platform the last time I did that. But go figure, when people get stolen from, or when the people you trust with your money lose it all, people get pissed off. They get angry. That's already starting. And when this happened last fall, there was some small rural banks in Henan province in China that failed last fall. The Chinese government sent cops in gym shorts and T-shirts to beat them up and drag them away. I showed a video of that, and my channel got punished for it, so I won't be able to show you that this time around. It's not happening yet. It's only stories of angry protests. But that's also important why you follow me on Twitter, because on Twitter, I can show you that stuff. I can't show you here on this platform. And also, another typically Chinese response to this, China asks some funds to avoid net equity sales as markets sink. Deepening slowdown, property sector crisis have been a drag. Previous similar guidance did little to shore up the stock market. The Chinese government is saying, okay, stock market guys, don't sell. That's how we stop a market crash. We just have our Chinese communist dictators say you're not allowed to sell your stocks, or at least strongly suggest you don't sell your stocks. It's not going to work. They've done this before. And again, what do the Chinese do? What do tyrants do? Again, our guys do it here in the States whenever they can. You slam shut the doors, you chain the exits closed, you don't let people out. That's what they do every time. Just like the poor people on the Titanic in the movie. Got to let the rich people on the lifeboats first, chain close the doors. They do the same thing in investments in China. They're giving the rich time to get out before the sell-off hits. I just want to scroll all the way down here. History shows that such guidance tends to do little to support the market. After the authorities were said to have made a similar request back in September, the CSI 300 gauge plunged about 10% in the following few weeks to reach the lowest level in over 3 years. So the Chinese have done this before, told people not to sell stocks, and people ignored them. Probably going to happen again. And last but not least, guys, you would have seen this coming if you had been at the Stockpole Silver Symposium last year in Spokane, Washington, where I gave a whole talk about the collapse of the China housing bubble and how it was coming, and that even though it had fallen from the headlines, it was still going on, and how the LGFVs and the shadow banks were a risk. And yes, we talked about trust companies. Well, it's all coming to a head. This story would not surprise you if you had seen my talk at the Silver Symposium last year, and that's coming up again in just 44 days. In beautiful Las Vegas at Caesar's Palace. So won't you join me at the Silver Symposium? Come up and say hi, shake my hand. Let's have a beer together and let's talk markets and finance. I love these events. And there is a link down in the description below. I'll also pin it in the comments. If you use that affiliate link, you will get 10% off your tickets. And I got a few people I have to say thank you to right now. I have got Mr. Steve Woitis. What's up, Steve? He says, when adjusted for inflation, are Target's latest earnings really so great? Besides, sales were down 5% last quarter. Well, Steve, as a matter of fact, that negative 5.4% comparable same-store sales, you can subtract inflation further from that because those are nominal numbers, not adjusted for inflation. Good catch, my friend. So if you subtract, say, 3.3% CPI from the negative 5.4% same-store sales, suddenly you're at negative, 8.7? Don't make me do math. It's early in the morning. over 8% decline in real same-store sales adjusted for inflation. Good question, Steve. That just makes it worse. Goes to show you how bad things are at Target. Thank you very much, Steve. I appreciate the super chat and the support of the channel. And thank you, Jeffrey Westlock, who the sticker does not show up on StreamYard, but let me see if I can find what Joffrey sent. Jeffrey, sorry if I'm mispronouncing your name, Jeffrey. I'm looking for it. Message retracted. Oh, well, I'm sorry to see your message go, Jeffrey. Is there anything else in there? Oh, well, you know what? I'll go back through the chat, and if I see what you sent... Oh, here it is. He sent another one. Thank you, Jeffrey. I appreciate that, sir. He says, about the decriminalization of strong-arm robbery, it's a good path to get people to cry out for and totalitarianism to save them from freedom. Oh, man. Talk about a trigger warning. That last bit. Save them from freedom. Ooh, talk about a statement that gives me the creeps. That's accurate. That's frightful. Let me just say that. Now, let me just tell you the big thing that I worry about decriminalizing strong-armed robbery is when law and order fails, people take the law into their own hands. That's dangerous. All right. We've already seen an example of that. There was a video, and my buddy Chris over at Financial Prepper got in trouble for talking about this. Again, the censorship. This is why it's very important that you follow me on Twitter and follow Financial Prepper on Twitter while you're at it. Because Chris got in trouble. There was a video of two shop owners who were getting strong-arm robbed, and they just had enough. One of the guys tackled him, and the other guy beat the guy that was robbing him with a stick. And Chris pointed that out on his channel, and he got in trouble for it. So if the police do not enforce the law and the prosecutors don't prosecute the criminals, effectively legalizing strong-arm robbery, are people going to just sit by while their livelihoods are taken from them and their stores are ruined? Or are people going to take matters into their own hands? That's when you get really big problems. All right. So not only is it the onset of totalitarianism and, these cities descending in an absolute unlivable chaos, but it's also, it invites vigilantism, and it's just not good. This is societal decay happening in real time. I hope these prosecutors get their act together and start throwing these a-holes in jail. Because if they do that, then maybe the cops will actually respond to the calls. Because why would a cop respond to a call if the guy's just going to be back out on the street without even a slap on the wrist the next day? So it's not the cops' fault. They can't do anything about it. So I pray it starts with the prosecutors and it works its way down from there. That is before shop owners start taking matters into their own hands, which I am not advocating. I want to just emphasize that. I am not recommending that. But look, you work hard your whole life to start a business and open a store, and then people are just allowed to come in and take it from you and ruin everything you've worked for. Doesn't end well, guys. Thank you, Jeffrey. I appreciate the super chat and the support of the channel, sir. And Mr. Grandpa is back in the house. Thank you, Grandpa. He says, how much did the Russian bride pay Peter's family? All right, Grumps, I'm not going to do that. Don't take a cheap shot at Peter. Thank you for the super chat. I guess I got to read these before I put them up on the channel. Hi, Peter. I hope you're doing all right over there, buddy. Grandpa, you're pushing my buttons this morning, man. Thank you for the super chat, everybody. Thank you for the support of the channel. I appreciate that very much. And I hope you guys will come see me at the Silver Symposium, link down below. Also, thank you to my Patreon supporters. Looking forward to talking to you guys this afternoon on our Zoom call. Always good time talking to you guys. There's a link down below to Patreon. Also, should you feel so inclined, and hi, Mom, hi, Dad, I love you guys. Till next time, live small and dream big.